Something massive is happening right now, and almost nobody in the mainstream financial media is talking about it. China, the world's second largest economy, has quietly resumed buying gold at a scale that should make every investor stop and pay close attention. And here is the part that will genuinely surprise you. The real story is not just about gold. Hidden inside this development is a signal that could be one of the most powerful setups silver investors have seen in decades. If you are holding silver or even thinking about it, what happens next in this story could change the way you look at your entire investment strategy. Stay with me because this goes much deeper than it looks on the surface. If you are new here, welcome to Silver and Gold, the channel where we break down exactly what is happening in precious metals, macroeconomics, and global finance in a way that actually makes sense. Hit that like button right now and subscribe, because what we are covering today is the kind of analysis that most people will not find anywhere else. Now let us go back to the beginning, because to understand why China's gold buying matters for silver, you need to understand what China has been doing for the past 2 years, and more importantly, why they suddenly stopped and then quietly started again. In 2023, China's central bank, the People's Bank of China, was on an absolute gold-buying rampage. Month after month, they were adding gold to their reserves at a pace that shocked analysts around the world. They were buying so consistently, so aggressively, that gold prices were rising even when Western investors were selling. Think about that for a moment. Gold was going up even when hedge funds and institutional money in the West were pulling out. That is how strong China's buying pressure was. Then, in May of 2024, something strange happened. China stopped. Officially, at least. The People's Bank of China reported zero gold purchases for several months straight. And this is where the story gets interesting. Gold prices barely moved. They did not crash, they did not collapse the way many expected. Instead, gold held firm, and then kept climbing. The question that nobody was asking loudly enough was simple. If China stopped buying, why was gold still going up? And here is the answer that changes everything. China never actually stopped accumulating gold. They just stopped reporting it in the same way. This is the part most investors completely missed. Central banks do not always have to purchase gold through their official reserve channels. There are sovereign wealth funds. There are state-owned enterprises. There are undisclosed intermediaries. When you start connecting the dots across shipping data, refinery activity in Switzerland, trade flows from mining regions, and movements through financial hubs in Asia, a very different picture emerges. The demand never stopped. It just moved off the visible ledger. But that alone would be important enough. What happened next made the situation much bigger. By late 2024 and into 2025, China officially resumed reporting gold purchases, and the numbers, even in the official data, were significant. But here is the detail that most people missed inside those reports. The pace of accumulation had actually accelerated compared to the pre-pause period. China was not just resuming buying, they were buying faster. And they were doing it at a time when gold was already trading at or near all-time highs. That is not the behavior of a central bank making a tactical trade. That is the behavior of a country making a strategic, long-term decision. Now here is the critical question. Why? Why is China stacking gold at all-time high prices with this kind of urgency? To answer that, you have to understand what China is actually worried about. And when you see what they are preparing for, the silver connection becomes undeniable. China holds an enormous amount of US dollar-denominated assets. We are talking about trillions of dollars in US Treasury bonds, dollar reserves, and dollar-priced trade revenues. For decades, that was fine. The dollar was the undisputed king of global trade, and holding dollar assets was the safe, rational choice. But something has been shifting underneath the surface of the global financial system for years, and China saw it before most Western investors did. The United States has been using the dollar as a geopolitical weapon. Sanctions, asset freezes, exclusion from SWIFT, these are tools that Washington has deployed against countries that challenge American foreign policy. And after what happened to Russia's reserves in 2022, China's leadership received a very clear message. If you hold your national wealth in dollars, that wealth can be frozen, seized, or made inaccessible at the discretion of the United States government. China made a decision. They are diversifying out of dollar exposure, and gold is the primary vehicle for doing it. This is not speculation. This is observable, documented, ongoing policy. And here is where this matters so much for silver investors. When a nation of 1.4 billion people, with the second largest economy in the world, decides to move wealth out of paper assets and into physical metals, the demand shock that creates is not contained to gold alone. History shows us this clearly. Every major gold bull market has eventually pulled silver higher, and silver, because of its smaller market and industrial demand layer, almost always moves with more percentage force than gold. But here is what makes this particular cycle different from anything we have seen before. And this is the detail I really want you to focus on. Silver is not just a monetary metal anymore. It is an industrial critical material. Solar panels, electric vehicles, advanced electronics, medical equipment, defense technology, silver is inside all of it. And China, the country that manufactures the majority of solar panels and electric vehicles on the planet, consumes more silver industrially than almost anyone else. So you have a situation where China is simultaneously the world's largest industrial consumer of silver and one of the most motivated accumulators of hard assets. Those two forces are operating at the same time in the same market. Think about what that means for supply. Global silver mining produces roughly 800 to 850 million ounces per year. Industrial demand alone has been running above 600 million ounces annually. Add investment demand, jewelry, silverware, and the market has been in a structural supply deficit for multiple consecutive years. That is not a prediction, that is already happening. Above-ground silver inventories have been drawing down consistently, and the pace of that drawdown is accelerating. Here is where things get really interesting. The gold-to-silver ratio, a measure of how many ounces of silver it takes to buy 1 ounce of gold, has been historically elevated for years. Historically, this ratio has averaged somewhere in the range of 40 to 60, meaning for every ounce of gold, you could historically buy 40 to 60 ounces of silver. In recent years, that ratio has been sitting between 80 and 100. What that means, in plain terms, is that silver is historically cheap relative to gold right now. And every time in history that gold has entered a major bull market driven by monetary and geopolitical forces, silver has eventually closed that gap, and usually closed it fast and dramatically. Now consider this timing. China is accelerating gold purchases at record prices. The gold-to-silver ratio is historically elevated. Silver has a supply deficit that grows each year, and global industrial demand for silver is being supercharged by the clean energy transition that every major government on Earth is funding. That is not one tailwind for silver. That is 4 or 5 simultaneous tailwinds all pushing in the same direction. But here's the part of this story that most people are not talking about. And when I say most people, I mean most financial analysts, most mainstream commentators, most YouTube channels in this space. China is not just buying gold for its central bank. Chinese retail investors, ordinary citizens, have been flooding into gold and silver at a rate that is genuinely historic. In 2024, Chinese retail demand for gold jewelry, coins, and bars reached levels that broke records. Physical gold shops in major Chinese cities reported waiting lists. Online precious metals platforms saw trading volumes surge by hundreds of %, and silver followed the same pattern. The Chinese public, facing a struggling real estate market, a volatile stock market, and a currency they no longer fully trust to preserve purchasing power, has been moving into metals in a way the world has not seen in modern times. Here is the consequence of that. When both institutional and retail demand in a country of 1.4 billion people moves in the same direction, toward physical gold and silver, the pressure on global supply is not gradual. It is sudden, significant, and very hard to reverse quickly because physical metal cannot be created out of thin air the way paper assets can. Now let us connect all of this back to what silver investors need to understand right now. We are at a point in the global financial cycle where multiple independent pressures are converging on silver simultaneously. De-dollarization is driving demand for hard assets. The clean energy build-out is creating structural industrial demand that only grows. Retail demand in China and other emerging markets is absorbing available supply. Above-ground inventories are declining, and the gold market, the market that has historically led silver, is being driven higher by one of the most powerful buyers in history, operating with a strategic, long-term mandate. The question is not whether silver will eventually respond to all of this. The question is whether you are positioned before it does. Now here is a thought that I want you to sit with because this is where I invite you to share your perspective in the comments. Many investors watch gold and feel like they missed it. Gold has already made enormous moves. The easy money, some argue, has already been made in gold. But silver, even with the moves it has already made, is still historically cheap relative to gold. If the gold-to-silver ratio were to normalize even partially, moving from 85 or 90 down towards 60 or 50, the percentage gain in silver would dwarf anything gold delivers from current prices. I want to hear from you. Are you watching this developing picture in China and global demand? Have you started positioning in silver? Or are you still on the fence, waiting for more confirmation? Drop your thoughts in the comments below. This community consistently has some of the most informed perspectives on precious metals anywhere on YouTube, and your experience matters here. Let us also address the counter-argument directly, because no honest analysis ignores the other side. Some analysts argue that China's gold buying is already priced into the market. Gold is at historic highs, the argument goes, so whatever China is doing has already been reflected in prices. This is a reasonable concern on the surface, But it misses something fundamental about how physical demand interacts with paper markets. The gold and silver markets still operate primarily through paper futures contracts. The number of paper claims on gold and silver far exceeds the amount of physical metal available for immediate delivery. When physical demand from a buyer like China becomes sustained and large enough, it eventually forces a reconciliation between paper prices and physical reality. That reconciliation, when it happens historically, has always been violent and rapid on the upside. The market does not gradually adjust. It gaps higher as the paper market is forced to reprice against physical scarcity. And here's the final layer that ties all of this together. Central banks globally, not just China, have been buying gold at the fastest pace in over half a century. The World Gold Council data is unambiguous on this. Country after country, from Poland to India to Singapore to the Gulf states, has been adding gold to their reserves. The era of central banks being sellers of gold, which characterized the 1990s and 2000s, is completely over. We are now in an era where central banks collectively are net buyers, and the pace of that buying is accelerating. Silver does not have a central bank buying program. It does not have the same institutional framework that gold has. But precisely because of that, silver's price discovery has been slower to reflect the new reality. And that lag, that gap between where silver is priced today and where the fundamentals suggest it should be, is exactly what makes it compelling for the investor who is paying attention. What China is doing with gold is a signal. It is a signal about where the world's largest accumulator of strategic assets thinks this global financial story is going. It is a signal about confidence in the dollar system. It is a signal about the future of hard assets in a world of rising debt, rising geopolitical tension, and a clean energy transition that is entirely dependent on physical commodities. And silver, sitting right at the intersection of monetary demand, industrial demand, supply deficits, and historical undervaluation relative to gold, may be receiving that signal more quietly than gold, but arguably with even more force building behind it. The question is not whether the world is changing. The question is whether you recognize what those changes mean for the assets in your portfolio before the majority of investors do. If this analysis gave you a clearer picture of what is happening, share this video with someone who is paying attention to precious metals. The conversations that start from content like this are exactly the kind of conversations that lead to better decisions. And if you are not already subscribed to Silver and Gold, now is the time. We cover the developments in precious metals, macro finance, and global economics that actually matter. The kind of analysis designed to give you an edge, not just headlines. Like this video if it delivered value. Subscribe so you never miss what we put out next. And leave your take in the comments. Because in a world this complex and this fast-moving, thinking out loud together is one of the most valuable things this community can do. The story of China and gold is still being written, and the chapter on silver may be the most important one yet.